Hello, my friends, and welcome back. Thank you very much for being with me again today. Close to you, huh? Well, here it's a little problem here. A little problem is used to be a friend of mine. Used to say a little problem, but a little problem change everything. So yeah, we got a little problem, and the problem is the stock market is kind of a book. Well, first a disclaimer: I'm not an expert on that, okay? But I think I know more than an average person. Anyway, don't take my advice. I'm just going to provide you with some information, and that is, it's a domino effect. It seems like after that beautiful Silicon Valley bank went bellied up, and the other one in New York and others. Now we got a little problem if we have the Swiss banks getting a little bit tipsy, if you know what I mean. So I have an article. Actually, I have 3 articles here. And I'm going to start with this one, if you don't mind. And if you mind, I will do it anyway. Here it is. So this is from Sputnik. Domino effect. Credit Suisse shares plunge. Well, if that plunges, that's bad, because this is one of the, most, how should I say, stable indicators. And that if this plunge, that means we got a global problem, certainly. But anyway, if you don't believe it, because it's from Sputnik, you can find the same information on other more reliable free speech, free media outlets. In the meantime, I'm going to propagandize you with Sputnik, okay? Despite early assurances that the collapse of the California-based Silicon Valley Bank would be an isolated incident and not the start of a new financial crisis, confidence in financial institutions around the world has nonetheless been shaken, and dozens of major banks have lost huge amounts of value in less than a week's time. Shares of the Zurich-based bank collapsed on Wednesday after Saudi National Bank, its chief investor, refused to provide it with financial assistance, setting off a wave of losses across the continent. All right, so we got a little problem here. So the crisis quickly began to spread across European financial institutions, with France Banque Nationale Paribas, Europe's second largest bank grouping, losing more than 10% of its value. Did you hear that? So France's BNP, Europe's second largest banking group, losing more than 10% of its value. Société Générale, Spain's Banco de Sabadell, Germany's Commerzbank, and the Italian banks Unicredit, Fineco Bank, and Monte dei Paschi all saw massive share sell-offs on Wednesday as well. U.S. stocks suffered as well, with the Dow Jones down by nearly 500 points midway. Sell-offs were driven by declining bank stocks, with JP Morgan Chase, Citigroup, and First Republic all suffering big losses. Yes, long live, what's his name, Biden. It's not his fault. Yeah, it's under his watch. You know what I mean? If you are the captain of a team and your team sucks, guess who's going to get fired? You first, in a normal situation. But anyway, First Republic saw its first shares fall by 61% on Monday, before rebounding on Tuesday, then losing 15% by midday Wednesday. So Thursday, before the bank crisis was set, right here, in motion by the collapse and nationalization of Silicon Valley Bank, the 18th largest U.S. bank, on Friday. Other factors also hurt markets on Wednesday, including a decline in the retail sales in the U.S. and persistent anxiety about the Federal Reserve's coming interest rate hike. Such hikes were directly implicated in SVB's collapse and its devalued bonds, resulted in the bank having less cash than it has believed. Petroleum prices also declined, with West Texas Intermediate WTI falling before $70 a barrel for the first time since late 2021, and Norway's Brent crude falling to 74 a barrel, a 13% decline since Monday. Well, if Norway loses this, they got to start working, and then it's all done with all the communism there. All right, let's move to the next article. It's the same thing. It says Dow drops as banking crisis deepens. The index that tracks 30 blue chip U.S. stocks plummeted more than 680 points on Wednesday. The The Dow Jones Industrial Average slid over 680 points, down over 2%. The S&P 500 dropped 1.8%, while the tech-heavy Nasdaq was 1.5% lower. And it says U.S. banks shared also fell, with Citigroup and Wells Fargo both down 5%. JP Morgan Chase shares dropped 3.6%, while Goldman Sachs and Bank of America stumbled around 4% and 3% respectively. Now we have here, the Swiss lender is currently trying, Credit Suisse, largest investor right here. So the customer outflows in the fourth quarter total over 110 billion Swiss francs. All right, good, done with that. Let's go to this one. European bank stocks sink on U.S. contagion fears as sinks on. So anyway, this is the same article from same evil Russia Today. And now let me show you something else. But gold. Here is the gold. Gold is the blue here, and the right here and gold is the yellow, and the blue is the dollar. So you see the dollar is right here, went up, the gold was low. Look at the bottom here. Well, maybe look right here, the lowest. The gold was 1,855. That was in March 3rd, 2023. And right now, gold got 1,925. Let's put it like this. This is in the last, what is this? Where is that? This is the last month. This is last week. This is what gold did last week. Jumped for 1,815 to 1,925. That's more than $100. That's more than 5% increase. And we put this in, let's say in the last week, let's put it with S&P 500. That's S&P 500, your beautiful investments. Let's put it with, let's say, crude oil. There you have it. And US dollar. There you have it. I'm going to take the crude oil off, right? If I can, right here. I'm going to put it the last day. Let's say what happened last day. This is the last day for the gold. Let's put it against it doesn't go over US dollar. No. So anyway, this is just the week. So this is the situation we are in. Gold appreciated tremendously because a lot of people, I guess, want it. So now everybody goes for products, for things. And here we have the S&P and all these banks collapsing, or at least losing a big chunk of their shares and all that. Who's guilty? Whose fault is it? You guessed it, Vladimir Putin's. Yeah, that's the problem right here. They will find it and they will point the finger towards him nevertheless. However, but you know that's not it. That's an internal problem. So when they point the finger to China and Russia, yes, they are your competitors. Yeah, you can call them enemies if you want. But the problem is here, actually. Here, because those guys are too greedy. Something happens. And I think it's because of the internal affairs of the politicians, banking systems, campaign donations, military-industrial complex, and this kind of elites, they call themselves. So, domino effect. I said this, I don't know, for about a year or so already, that things will go down, down, down before they go up, logically. But wait for more. I know this is not the end of it. This is just the beginning. But that's just a gut feeling. Right? Don't listen to me when I say that. I just have my own concerns regarding this. By looking around a little bit, going around the block, a few times, and observing and memorizing, seeing patterns. And if you're not too subjective, you're going to see the signs there over there. And this reminds me of the Romania after 1989 revolution, after the communists left, were invited to leave by the same guys. It was a popular uprising, spontaneous. Yeah, okay. Yeah, it was. Yeah, if you want to believe that, that's fine. We won. Yeah, you won. After that, you wouldn't want your money in a bank at all because the banks were popping up, disappearing with your money. And then a lot of people ended up in other countries by the Mediterranean Sea. some of them. So it seems like I'm used with these guys. So I'm insulated because you know, put your money in the bank, you might not have it tomorrow. I'm just, as I said, I don't want to scare you, but here is the direction we're going. So thank you very much for being with me again today. Stay strong, stay smart, look for the truth, and be just.